Yes, I can see the screen.
All right, thank you so much. All right, so I welcome back to the second class of for taxation. Um, and in the first class, we started with basis of assessment. You explained what base of assessment is. We explained what basis period was. We explained what preceding year basis mean. We explained what actual year basis mean. We explained what actual year basis mean. We also explain what normal and abnormal basis what they mean. We also explain one important concept, which is the government year of assessment or the tax year, right? And we said it is the year that the government had decided to assess the profit of a particular entity, right, to tax. Okay, and that is the tax year. And we said it is the same thing as government calendar year. It's the same thing as year of assessment. All right, and in talking about normal basis and abnormal basis, we said the normal basis must number one must have 12 months, right? Secondly, we said it must begin immediately after the first one ends. That is, there won't be any gap in between. The third thing we said it must be on what preceding year, right? Am I correct? Is that correct?
Yes, sir.
So, okay, someone
Yes.
show me that. Okay. Then we talked about abnormal basis. We said abnormal basis is like the direct opposite of normal basis. Number one, abnormal basis, it will have like number of months that is not equal to 12. It can be less than 12 or it can be more than 12. We saw examples last week. We also said that it does not have to it will not begin immediately after the previous one ends, right? And in that because of this particular situation in the old law, we had like several issues with gap between basis periods, right, and the overlapping of basis periods that led to so many complications where profit that has already been assessed to tax are being assessed into tax in another, in another year, in another tax year, which was a lot of complication for taxpayers and tax authorities themselves. The third thing we said that it's may not be on preceding year basis, right? Is that what we said? Is that what we said? Someone should confirm to me that was what we said. Hello. Someone should confirm to me that was what we said. Can you hear me?
We can hear you, sir.
Yeah, I said someone should confirm to me that was what we said.
Yes, yes, sir. Not preceding years.
Okay. Um. So then we moved on to talk about the fact that abnormal basis can be caused by three popular situations. Number one is when a company is just commencing business, right? So for instance, I give the example of the fact that a company that is commencing business in June and has decided can decide a company that is commencing business in June can decide, right, that their accounting year end will be 31st of December, which is the most popular accounting year end for companies in Nigeria, even all over the world. So in that case, for the first year, that is their year of commencement, their accounting year will be less than 12 months because they're just commencing. So it means that that first year will be an abnormal basis because it is less than 12 months. All right. I gave like a very funny example as well. I said most of the companies that have, all right, that have 31st of December as their accounting year end, it is most likely that the commencement year, the year of commencement rather, is less than 12 months because if it would be up to 12 months in the first year, that is their first year of trade, it means that they must have started the business exactly on the 1st of January. And we all understand that on the 1st of January, nobody wants to work. Everyone is with their families, eating New Year chicken and turkey and all of that. So definitely the number of the basis for that first year will be less than 12 months. The board can decide, okay, let's take two at least take 2 weeks out of this January to enjoy the New Year festivities and all of that. Then they commence maybe at the middle of at the middle of um at the middle of January. All right. So automatically it leads to an abnormal basis. The second example, we said another thing that can lead to an abnormal basis is cessation of trade. That is, for a particular reason, a company cannot go further to, um, cannot, carry their business further anymore. Maybe due to whatever reason they are winding up. So in that case, they necessarily, in most cases, will not wait until the accounting year end because before they stop business or before they cease business. Most of the time, they cease business during the accounting period. So it means that that final year or that terminal year or that final year of business will also most often time be less than 12 months. All right. And that is what also leads to an abnormal basis. Now, the third thing that we talked about, all right, that leads to abnormal basis in the last class is a change in accounting dates. So a company can decide that this accounting date, for several reasons, this accounting date is no longer favorable for me. For can be a it might be a statutory requirement from the regulators. And I gave an example last year. I said that because I work a lot closely with companies in the financial services industry. In 2020, CBN issued, a mandate that all banks must now prepare their accounts to 31st December every year. So initially, banks normally have the liberty of deciding what accounting year end they want to choose as their own year end. But because of regulatory requirement now from CBN, they have to align. So it means that all of them that year have to change their accounting dates from, for instance, some of them 30 September to 31st December. At least I think they give them a period of 6 months or thereabout for compliance. All right. So that is an example. So it means that in that year of change in accounting dates, it is not necessarily going to be a 12-month period. In fact, in most cases, it will not be a 12-month period. Because look at, for instance, a company that is changing from September to December. The period from the beginning of the period to the end of the new period will not be 12 months because the end of the period has now changed. Am I communicating, please?
Yes.
Yes, you are.
Okay. So that's another reason why we can have an abnormal basis. And for just look at the way it sounds abnormal. When we say something is abnormal, it means that it is not something that should occur on a normal day. It is not something that, if everything is equal, it is not something that we should see. If everything is equal, a basis period should be 12 months. If everything is equal, a basis period, a basis period should be on preceding year basis. If everything is equal, a basis period should commence immediately after the previous one ends. That is, if a basis period is ending 31st December, the following one, the next one should start 1st of January. If one is ending 31st of March, the next one should start 1st of April. But then we have situations that lead to abnormal basis, and we already identified them. Number one, commencement of business. Number two, cessation of trade. And number three, change in accounting dates. In the first class, we dealt with commencement of business, right? Talked about the commencement rule. Second, also in the first class, we also talked about cessation of trade and what the Provision of Finance Act is. All right. So let me see the people that are in the class, and I'll just take 5 minutes to ask questions based on the last class. So if you will not think that I will not be asking you that, you can just like attend my class and not go through your notes. Muibat, you joined the class late, so I'm going to be asking you first. So what is the provision of the law concerning commencement? Just give us a summary. What does the what does Finance Act say? Just tell us something that Finance Act says about commencement of new trade. Muibat, are you there? Hi, Muibat.
Yes, I'm here.
Okay, let's hear you, please.
Okay, is it about commencement
Yeah, what does the
from
law say?
the Finance Act?
Yeah.
It says the assessment of profit of a company
Okay.
in the case in the case that the company can I?
Okay. I'll give you some time
I
to think
can't
about it
remember.
because I'm calling you first, but next time I'm going to
Okay.
call you, you must be able to do something about it. Chidima, tell me one thing the Finance Act says about commencement.
In commencement of a business is one of the abnormal basis period in taxation, and that for the first year it will be starting from that date of commencement to the end of its first accounting period.
Thank you.
While for the second year, it will be from the date immediately after that end of the first accounting period to this end of the second accounting period, and for the third year, it will be on preceding year basis.
Yeah.
Thank you.
Remember? Yeah.
Okay. Aramide, can you say something? Aramide, please unmute yourself and talk.
Yeah, about the commencement, right? Of
Yes, yes. Or commencement of business. What does Finance Act say?
it says that the following year will start on preceding year basis immediately after the end of the next of the year.
Okay. Okay, thank you. Abiodun. Your network is broken. Abiodun, your network is broken. Abiodun, your network is broken. Hello, are you on the road? Okay. We cannot really hear Abiodun. But thank you so much. Okay, Muibat, I want to see something. Please, let's have you now. Just tell me something, even if it's something that they have said before.
Commencement.
Abiodun, your network is bad. We cannot hear you well. Your network is breaking. Muibat, please, you can unmute yourself and just tell us something. Muibat, are you there?
Yes, I'm here.
Okay, please. Let's have you now. Tell us something that the Finance Act says about um commencement rule. Someone already helped us, told us how to assess the first, second, and third year, right? And she even mentioned that first year, just to help you put your words better, right? Chidima, just help you to put your words better, right? For the first year it is not an example of an abnormal basis, but it is an example of what causes abnormal basis. All right, it is an example of what causes a commencement is an example of what causes or what leads to abnormal basis. All right, so Muibat, you can continue, please. I want to be sure that
So,
okay,
So
I'm listening.
we're just talking about the commencement period, not on the either abnormal or normal, right?
Okay, no,
It's
just share with me something that you pick up from last week. Then
okay that the um the commencement that the company commences the assessing of a profit from the
okay,
date which it commenced its business, and
okay,
to the first accounting to the end of its first accounting period.
that's
That's for
that's
the
for the
first
first year.
year, yes. And for the second year, the accessible profits that the profits for the first day at
Okay,
the accounting period we end to the end
okay.
of its second accounting period.
Yeah. We are trying to say that for the
Um,
first year, the accessible profit will be from the date of commencement to the end of the
to,
first
to
accounting
the
year,
end of the first accounting period, yes.
and the second one will be from the day after to the end of the
To
second
the
accounting year.
yeah,
Exactly.
and
So thank you.
the
Okay, for the third one, okay.
third year is for the following year. That's for the third year. The following year, the profit will be assessed based on preceding year basis,
Yeah. Okay. Thank you so much.
based on
Thank you. Thank you
preceding
everyone for
year
your
basis.
contribution. Please and please, I will keep reiterating in every class. The notes that we send to you and the videos are not just to sit down in your phones. Please read. Please start reading. Please
Sorry, I
and
don't.
please.
Did I get? Have any
You
note
know,
been sent? Taxation.
yes, there's a note was shared. The last class note. Are you on the group page? Are you on the Tax Online group page?
I'm not sure I've joined that group.
Okay, so after the class, we can actually talk about that, or at the end of the class. So the note for last class was shared. The recording was also shared. The note for this class was also shared this morning. So please always try to let us always,
I've not
go
joined
through
the
our
group.
note. Okay.
Let me
All right.
join.
So for today, let's just move straight because we might be ending the class earlier than 11 p.m. today. All right. For today, we are talking about the third reason, that leads to abnormal basis, which is changing accounting dates. So I said that you should recall. Can you all see my screen, please? Muibat,
Yes,
please
sir.
confirm that you can see my screen. Okay. Thank you.
Yes.
All right. We said
I
you
can
should
see your screen.
recall. All right, thank you so much, Mubat. We said you should recall that we mentioned in the last class that the third thing that can lead to abnormal basis is the change in accounting dates. So another reason why a basis period will be less than 12 months is a change in accounting date, like I explained earlier. And I said that change in accounting date occurs when a company prepares accounts to a given date. When a company that normally prepares account to a given date suddenly prepares the account to another date. I believe this is self-explanatory, right? A company that has been preparing its account to 31st of September now decide that for certain reason, maybe because they are being acquired by a new parent and the parent said, okay, all of my subsidiaries, you guys have to prepare your account to the same year end that I prepare my account to. And maybe the newly acquired subsidiary has been preparing its account to 31st of September before or 30th of September before. But the parent company that just acquired them prepares their own to 31st of December. And to ease consolidation, they have mandated the new company to change, the accounting dates to so in that case, right, we will have more than or less than the 12-month period in the year of change. And I said that when this happens, when there's a change in accounting dates, there are certain steps that a regulatory authority takes to decide the appropriate means of assessing the tax of the entity, or the profit of the entity rather, to tax. I'll repeat what I said. I said when there's a change in accounting dates, there are certain steps that the regulatory authority takes, which is FIRS in this case, takes to ensure that they appropriately assess the profits of the company to tax. And there's something I must tell you, and a mindset I must create in you that will help you if you decide to take, tax as a profession. Always know that the tax authority will always be on the side that gives them more liability. I'll repeat that and I'll say it in a different word. I'm saying if there are two options to select from, right, with the tax authority, the tax authority will always go with the one that will require the taxpayer to pay more tax, or that will require the taxpayer more liability. I believe that is clear. So you as a tax consultant, you must have the opposite mindset. While the tax authority is trying to work
Sorry
to
to interrupt you, sir. Please, can you repeat what you just explained?
what I'm saying is, when there are two routes in a particular tax situation, the tax authority, whether FIRS, Federal Inland Revenue Service, or the state IRS, you know,
Yeah.
they will always go with the route that makes more money for the government.
Okay. Yeah.
They will always prefer the method that makes more money for the government. And I said that you as a tax professional now, your duty is actually to, you know, to represent the taxpayer. So you must have the contrary or the opposite mindset.
Mm.
You must look for every means in the tax law and every tax loophole to ensure that your taxpayer, your client, or your company is not paying
Okay. Mm.
more tax than they
Oh,
should.
okay.
Because FRS, LRS, whatever they are, they always want you to pay more tax.
To pay more. Yeah. Okay.
So I'm saying that because in this case, we would always have to select between the higher liability. So to go back to what I was saying, I said that there are 6 steps that they take, and the first step is to identify the tax year when the change occurred. And I'm going to there's an illustration down for us to understand how we identify this first tax year when the change occurred. As we are going to see, the first tax year may not necessarily be the year when there is a change in the date, right? It might not necessarily be that first year when there is a change in the date. But before we consider that there's a change in an accounting date, I want you to note this. I want you to note this, please. Before we can say that there is a change in an accounting date, we must be able to see at least 12 months in between the previous accounting year end and the new accounting year end. Like I said earlier, there's an illustration down that we're going to check together. But I want you all to note that. The second thing is to identify the 2 years following that. So for instance, if you have identified that the first year of change, or the first tax year when the change occurred was 2012, the second step is saying that you should identify the next 2 years following that 2012. So it should now be 2013 and 2014. So you have 3 relevant years. The first tax year when the change occurred, the next 2 years following that year. The third one is to compute the assessable profit on preceding year basis using the old or the existing accounting dates. So for instance, if the company is changing from 30th of September to this 31st, from 30th of September to 31st of December, what this is saying is After you have identified the year that the change occurred and you have identified the next 2 years, now compute the accessible profit for these 3 years using the old accounting date. That is, assume that all of them are 30th of September, right? The next step now says that you should do the same thing. The fourth step now says that you should compute the accessible profit also for this 3 year using the new accounting dates. So if they are switched from 30th of September to 31st of December, the third step says that we should compute the accessible profit using 30th of September. The next step is saying we should compute using what? 31st of December. We will compute both separately. We will assume that those 3 years have 31st of December as their accounting year end. In the first one, we'll assume that the 3 years have 30th of September as their accounting year end. Step 5 now says that we should add up the accessible profit of these 3 years separately. That is, add up the accessible profit of the 3 years under the old or existing accounting date and add up the accessible profit for the new period, right? And then compare both. The next step now says that you should add up both and then compare. Then the final step now says that you should select the one that is higher. So I'm going to repeat the step I said in other words. I said the first step is number 1, identify the tax year when the change occurred. The second one I said identify the next 2 years. That one is very simple. The third one I said compute the accessible profit, right? The way you normally compute it, which is on preceding year basis, using the existing accounting dates. The fourth step, I said compute the accessible profit on preceding year basis using the new accounting date. The fifth step, I said add up the accessible profit for these 3 years separately, right? And compare. The last step now says that you should now select the higher of the two. So the higher of the two is what the FIRS is definitely going to select. Right, and that was why I started with whenever there are 2 options for the tax authority, they always go with the one that will make more money for the government. Now, and I put a note here. I said that in this note, I said that for step 1 above, that is for the step where you identify, it's like the first step, but it is one of the most important steps. Once you miss the year when the change occurred, you have missed everything. So I said for the step 1 above, for us to be able to conclude that a particular year is a year of change, that year must contain at least how many months? 12 months. Excuse me. That year must contain at least 12 months. I'll give you 30 seconds to internalize that. I'll give you 30 seconds to internalize that. You can go through it again. All right. I believe we have been able to go through it again. All right. Let's continue. Let's look at illustration 1 together. I don't want us to see the solution. For illustration 1, who can read for us? Chidima, please, can you read for us illustration 1? Chidima, please read for us. Is Chidima in the class?
Yes. Illustration 1.
All right.
Identifying the year of change. Oluwajayi Limited gave the following information in relation to its accounting dates. Year ended 30th June 2010. Year ended 30th June 2011. year ended 30th June 2012, period 2, 30th September 2012. Year ended 30th September 2013 and year ended 30th September 2014. Required, identify the year of change.
Thank you so much, Chidima. So, from what we have here, you can see an example of what I was talking about. So, normally, by just glancing through it, we see that in 2012, the year end changed from 30th June to 30th September. But was that really the year of change? Aramide, was that really the year of change? Based on what we talked about, based on these notes, for there to be a year of change, we said that year must contain at least 12 months. Was it really the year of change? Was 2012 really the year of change? Aramide, please.
Sorry. In my own understanding, I feel that year should be the year of change.
Okay, why did you think that should be the year of change?
Because they said it must have 12 months after, immediately after the year, and then if you 2010, 2011, they had 12 months in between, if I'm correct.
Okay. Okay, that is the purpose of illustration. All right, thank you so much, Aramide. Who else? I cannot see the screen. Let me look for someone I can call. Samsung. Samsung, please unmute yourself.
Is Abiodun. I'm the one using Samsung.
Abiodun, you are the one using NAS. You are the one also using Samsung. Yeah.
Because of the network.
Are you paying 2 lecture fee? You are joining with 2 devices. I'll tell
Yes.
the authorities to collect 2 lecture fees from you for the first and your second device. Okay, that's just a joke. Okay, so Abiodun, what year do you think is the year of change in this case?
30th September 2013.
Why did you say that? I think you have to mute one of your mics if you are using, because there's a sort of echo. All right. You have to
Okay.
mute the mic for the other device. All right. So why did you say that it's 30th September 2013?
Because between 30th June 2012 and 30th September 2012 is just 3 months.
Okay. Okay, so it is not up to 12 months, right? So it is not up to
Yes.
12 months, right? Okay. All right. You are right. Abiodun is also, in a way, I say Abiodun, Aramide is also right. And I understand what Aramide is also saying. But Aramide, please pay attention, and I want every other person to pay attention too. All right. What we are saying when we said for the first step, before we can conclude that a particular year is the year of change, that year must contain at least 12 months. What we are saying is that between the year end from the immediate previous one and the new year of change, there must be at least 12 months in between. So, Aramide, see, the last year end was 30th June 2012. The next one where they first made the change was 30th September 2012. Between these 2 months, between these two periods, rather, how many months do we have? We have just 3 months. So what we are saying is that for the purpose of tax, we cannot say that this is our year of change. Because between the last period and our period of reference is just 3 months, it's not up to 12 months. So technically, the following year that has more than 12 months, that has at least the 12 months, is what will be our year of change. Aramide, please confirm to me that you understand.
Yes, I'm with you, sir.
Do you understand?
But I have a question. But
Okay,
in
please.
now, they won't state or they won't give to us the year. We'll just use the illustration, and then anywhere they won't give to us in the question that this so is the year of change. But you will just use the illustration to find out the year that ends that did not complete a whole 12 months. So the following year that contains more than 12 months or a particular 12 months is the or particular 12 month year is the year of change.
So if they are giving you a question, for instance, this particular question, right, is actually like an extract from a past question. It's an extract from a past question. You will see the remaining part of the question down underneath. But just for the step one is the reason why I extracted it like this. Because I know people make mistakes with it a lot. So I wanted us to understand that first of all before we move to the other part of the question. So if they're asking you a question on change or on change in accounting dates, they will normally give you something like this, and they will expect you to identify the year that the change occurred, and then you should build on that to find the appropriate accessible profits. Do you understand what I'm trying to say? So it is now you that with your understanding identify that if even if there is a change in the year end in a particular year, and it is not up to 12 months between the last and the present, then that year is not the year of change. Because we said that according to the law, the year of change must contain at least 12 months. So if the first year when the change occurred is not up to 12 months from the last one, then the following year that is up to 12 months will be the year of change. Aramide, please, do you understand?
Yes, perfect.
All right. Please, who else has a question? Who else has a question? Please, you permit me to end this class by 10 because it has been a very long week, and I'll see if we can take. It depends on how far we can go. If you can finish it before, or if you have just few to go, we'll just wrap up. All right. But I want you guys to. I want to be sure that you guys understand rather than just squeezing the information into your heads. Okay, is that fine, everyone?
No, sir.
Okay, please. What is not fine?
The explanation for this year of change.
It's not fine yet, right?
Mm-hmm.
Okay, thank you so much. So I said the only thing that I've said that I feel like should confuse you is that in identifying the year of change, the period before or the period of reference must have at least 12 months from the last period end. Now, in this particular case now, we would have said that 30th of September 2012 is our year of change. But how many months is it from the last year? This is the last year before the change. Can you answer that? How many months is it? Please, can you unmute yourself and answer?
3 months.
3 months, right? So
Yes.
we are saying that because of what the law says, that before we can conclude that the particular year is the year of change, it must have at least 12 months. This is just 3 months. So what the law is saying is that for tax purpose, this cannot be our year of change. The following year, between this year and this year, is how many months? 15 months. So that one has at least 12 months. So that will be our year of change. So what the law is simply saying is that for us to be able to assess the tax properly in a case where there's a change in accounting dates, we must be able to appropriately identify what year the change actually occurred. And the year the change actually occurred must contain at least a 12-month period. It can be more than that, but it must have at least 12-month period from the last year end. All right.
Yes,
Is it clear?
yes,
Is it clear now?
yes.
Please,
It
who
is.
else has
Thank you.
question? Thank you. You're welcome. Who else has question? A question before we move ahead to another illustration. We have another illustration here. Who else has another question? Okay, let's move on. It's almost 10. Oh. No, we have to, it cannot be 10. So for the solution, I said, yeah, although the first time the accounting dates changed was in 2012. However, 2012 is not the year of change, but 2013 for for the same reason stated in the note above. Although the first year, we can see obviously that there was a change was 2012, but that 2012 is our year of change. No, it is not, because it's not up to 12 months. It's just 3 months from the last year end. So the year of change will actually be 2013, right? For this reason, it's the law. It's not something that we made up by ourselves. It is what the law says. All right. The second illustration, Oluwajayi Limited gave you the following information in relation to its accounting date. They said year end 30 March 2010, year end 30 March 2011, year end 30 March 2012. Then that's a period to 30 December 2012. Year ended 30 December. Sorry, that was a mistake. It should be 31st December. 31st December 2012, 31st December 2013, and 31st December 2014. Identify the year of change. Identify the year of change. So I will need someone. We have how many people in this class? Technically, we have 5 people, right? Apart from me. Hosanna, please.
Sir,
What year do you think is the year of change here? Please look at it
please, sir,
critically.
share the screen again. I can't see the screen.
I'm
Okay.
sharing the screen now.
Yes, I've seen it now. 30th December 2013 was the year of change.
30th September
Can you hear me, sir?
2013 was. Okay, I can hear you. I can hear you. So you are saying
30th December 2013 was the year of change.
okay. All right. Muibat, what do you think?
Yes, sir.
I said, what do you think? What is the year of change in this case? Don't
I
forget
even
the
want
law.
sorry. Yeah, I even want to take us back to the first illustration. I want to ask that since we're choosing, because the law says that for us to be able to conclude that a particular year is a year of change, it must contain at least 12 months. But in the
Okay.
first year ended, which is 30th June to
Okay.
2010 to second year ended 30th June 2011. Why then? Because between that two, we have at least a year. So I just want to ask that question. It has at least a year to there. So if we are not choosing that, we have another one which is started June 2012, which is also
12 months.
12 months.
Okay. All right.
And
So
so I just want
Muibat, I
clear
get you.
that we
Thank
are
you so
not
much for
choosing that.
asking. Thank you so much for asking the question. So what we are actually looking at is a period when a change occurred. You will realize that between this 30th June 2010
Okay, yeah, okay. Now June, then we got
is June,
that
June, June. So
yeah.
there's not been change in those years. So even though it is 12 months, there's not been change.
Yeah, okay,
But
now I
for
get
the
it.
very first time that we noticed a change was
The
this
change
period.
is in September. All
But
right.
the reason why this cannot be our year, that year of change, is because
Not
between
up
this
to
period
12 months.
and this period is
Yes.
not up to 12 months. So
Not
this
up to
period.
12 months. Okay, so we can go down now. All right.
Okay, thank you. All right.
Okay. So here now it's 2013,
Look at it critically.
Yes, it's 2013. 2013, because we have March, and then the first change is from 12 March to December 2012, same 2012. So it's not up to a year, which is just basically like 9 months or so. Then we have a full year between 2012 and 2013.
Okay. All right. Hosanna and Muibat are both wrong. Who can give us the right
Wow.
answer? Who can give us the right answer?
Okay.
I have a prize for the person that gives us the right answer.
Can I do again?
No, just wait.
Okay.
You have used your
But
lifeline already.
but but
Just don't worry, don't worry.
wait,
You have used your
change
lifeline.
here. Okay,
Who
yeah,
else?
no,
Muibat,
I've
please mute
seen it.
yourself, please.
I've
Who
seen
else? Who
it.
can give us the year of change, please? The correct year of change. I have a prize, and I'll just count five. I'll just count down from five. Please, if you want to give us the correct answer, just unmute yourself. Five. Even if you are soaking before, no wala. 5,
Yes, no, it's 2013.
4,
13.
3, 2, 1. So nobody thinks that that particular response was wrong. Hosanna and Mibat's response. So so as I've been shouting since morning now, we all still think that that response is right. Okay, actually it was right. Thank you so much, Hosanna and Mibat. That to be sure. Thank you. So we said we have solved this in class. So do we all understand this? Do you all understand why Muribat and do you all understand why Muribat and Hosanna said that the year of change is 2013 and not 2012? Right. Chidema, you understand, right?
Yes, sir.
Okay, all right. So we can move ahead. Okay. The third illustration, right, says the same guy, Oluwajayi. So this is a complete question now. It's actually a past question. We just changed the name of the entity, right? Oluwajayi Limited gave you the following information in relation to its account. We have the details of the account, year ended 30 June 2010, 400,000 naira. Year ended 30 June 2011, 520,000 naira. Year ended 30 June 2012, 600,000 naira. Now, period to 30 September 2013, 470,000 naira. We have year ended 30, blah, 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 to year ended 30 September 2015. We have 960,000 naira. The first thing I want you to note here is that, in the last class, I explained that the law of preceding year basis, right, started from Finance Act 2019. I believe you can all remember. And no examiner will make reference or will make you answer a particular question under the actual year basis because it's no longer in use. ICANN will not do that. Your question will be on preceding year basis. Okay. So even though these years fall under, the old law, please let's still ensure that we attempt it based on what is the current reality, which is preceding year basis. Okay, so we're given this question, and they said, as a tax professional, compute the assessable profits for the 3 relevant years of assessment. What do we do? Before I go to the workbook, I will reiterate the steps again. The first step is that we should identify the year of change. The second step says that we should identify 2 years after the year of change. The third step says that we should compute the assessable profit using the existing or the old accounting date. The fourth step says that we should compute the assessable profit using the new accounting date. The fifth step rather says that we should now add up each assessable profit under the old and under the new. The sixth step rather says that we should now pick the one that is higher, and that is the appropriate method and the appropriate assessable profit that the tax authority is going to select. Now, the first thing to do, right? Or let me try to split my screen. Okay. Sorry, let me. Split my screen. I cannot do that. Why can I not do that? Okay, I can split it this way. Then I can look for the Excel and also split it this way. Oh, okay. All right. So we can see both, right? Clearly, are both clear? The first screen and the second screen. Sorry, please, can you answer? Are they both clear?
Yes, sir. Yes, sir.
All right. So we have the question on the left, we have the response on the right. So we have illustration 3, right? We are trying to answer that. Illustration 3, they have given us the question. From what we can see here, we can see that at a particular point they changed the accounting date. So in this particular case, what year was the year of change? Who has not spoken? Wait, nobody should talk. Abiodun. Abiodun, in this particular case, what is the year of change?
30th September 2013.
I'm already should display the answer safe. Okay, you said 30th September. Sorry, pardon me, please. 30th September 2013, right?
Yes.
Yeah, that's correct. So we already answered step 1. Step 1, year of change. Year of change. Said 30. So year of change is what? 2013. Right? So that is our tax year of change. Step 2 says that we should select the 2 years following that. What are the 2 years following that? Muibat. What are the 2 years following that? Muibat, please omit.
September 2014 and
No, just the
2015.
year, the year of change.
Okay, 2014, 2015.
And 2015. Right. Step 3. Abiodun, what is I said Aramide, what is step 3?
The three is compute the assessable profit on preceding year basis.
Using what? Using which of the accounting dates?
The existing accounting date.
Yeah, or the new accounting date. Thank you. So the same way we computed assessable profit last week. So we would have our tax year here. We have our tax year on the second column. That's how you're going to draw it in your exam too. So you can just have the dates that you're looking at here. So what was the old accounting date? 30th June, right? Each year, right? That is the old accounting date. So you have tax year and you have basis period, and you have adjusted or accessible profits. So I'm gonna do this. I'm also going to do this. I'm also going to do this. All right. Okay, so we said our first relevant year is what year? 2013, right? That is the first year of change, right? 2013. In the old accounting date, what will be the basis period? The basis period is going to be from okay, because of Rosanna that is just joining us. Please, Rosanna, please pay attention to how we write out the basis period. The basis period is going to be from, it's preceding year basis, right? Am I correct? Preceding
Yes,
year basis,
Yes,
right?
yes, sir.
yes, sir.
So it means that the basis period must start and end before this 2013. So it means that the last year in the basis period must be 2012, not 20, must not be 2013. So it means that, and we are looking at 30th of June, which is the old accounting date. So it means that it is going to be from what? 36, 2011 to what? Oh, no, sorry.
October 30,
No, please hold
June,
on, please.
November.
So this is going to be 1/7, right? 2011. Do you know why it's 1/7/2011? Because the accounting year, the year end is 30th of June. So
Of June. Okay.
the start of it will be the following day, right? Which will be
Yeah.
1st of July, right? Am I communicating, please?
Yes, 1st of July.
Yes, sir.
So 30th of June, 2012.
2011 to 2012.
Right, let me just write this as 12 so everything is here. Okay. The second one will be 2014. Second one will be 2014, and it's going to be, let me put this up. Okay. The second one will be 2014. It will be a day after, it start from a day after, right? 1/7/2012 to when? 30th
30th
June.
June 2013.
Then the last one will be 2015. So it means that we have answered, that is question 1 and 2 to step 1 and 2 together. 2015 will now be 1/7/2013 to 30 June 14.
2014.
Is it making sense, please? Now, this is now where most of the work is. Remember last week we talked about the fact that in deciding what the associable profit will be, at some point you might have to prorate.
Yes.
You might have to prorate.
Check my
And it's a pity that a number of us, I checked Abiodun and and Aramide. I think those are the two people that sent their assignments to me. I checked their assignments, right? And I wanted us to actually answer it together, but because of time, I'll look at, if we do not answer it in this class, please remind me the next class, please. So 2013, 2014, 2015. The assessable profit for 2013, which is 1st of July 2011 to 30th of June 2012. I think that one is straightforward, right? Because we have it here. We are talking about this period. So we are talking about the period between this and this. So it means that what we are saying is that a day after this ended, a day after 30th June 2011 to this year end, how much did they make in that period? How much did they make in that period? Please, someone should unmute and let me know that you are following me.
Sorry, a day after what? A day after
I'm saying that for
30th June.
for 2013, the basis period is 1st of July 2011 to 30th
Yes.
of June 2012.
2012.
Where do we have that here?
Is
That
600.
scroll your screen down, please, so you can see the accessible profit.
The 600 here.
This is it. This is what I'm talking about. Can you guys see it very well? Let me increase the font size a little. This is what I'm talking about.
Yeah.
For this year, this is the profits from the beginning of the year to the year end. This is the profit from the beginning of this year to from the beginning of this year to this year end. This is the profit from the beginning of this year to this year end will be. This is the profit. So what is the beginning of this year? The beginning of this year will be 1st of
1
July
of July
2011
2011. Yeah.
to this period,
The
and
day
this is the
after
profit, and that is what we
600.
have here.
Yes.
Please, if you do not understand, please let me know. Please, if you do not understand, please let me know. Can I move on?
Yes, sir.
All right. So for this one, it will be what? 600,000.
600.
Let me put this in comma. 600,000. The next one, which is 2014, is from 1st of July 2012 to 30 June 2013.
Okay. Which is this one.
Right?
Yes.
So that is from this period. But we will now realize that there was now a change in this period. So it means that this period that we are looking at, 1st of July 2012 to 30th to 30 June 2013, started a day after this and
Yes.
ended within this.
Mm.
Am I making sense? Chidima, please
So it's
unmute
more
yourself.
than, yeah, it's more than a year.
Chidima, please unmute yourself.
Okay.
Chidima, from this year to this year, to this period, to how many months is it? Help us calculate it.
This is
Okay. That is 15 months.
15 months. So
Yes.
I will say that the period that we're looking for is between this and this, right? That was the year that was the first year of change, right?
Yes.
So for us to be able to get our 12-month period between this 15-month period, what do? We prorate.
So
Am I
for
communicating?
15 months.
Am I communicating, please?
yeah.
Am I communicating, please? Please,
Yes,
I want
sir.
everybody
Yes,
to
sir.
unmute themselves and let me know if you're on
Yes,
the same.
sir.
Yes, sir. Yes, sir. You are
Yes,
communicating.
sir.
Okay, I can hear two people's voice. Two people's voices. Oh yeah, the remaining people call. Am I communicating?
Yes, sir.
Oh my, that is third person's voice.
Yeah,
Fourth person, am I communicating?
I'm almost there, sir.
You're almost there.
Yes.
Okay. When we are done with this, I'll take it again, just for you to be clear. So we are saying that the basis period that we are looking for is a 12-month period. But because there's a change, the next year end is a 15-month period. So we have to prorate to be able to get our 12-month period, which has started from a day after this and
470
ended within this.
divided by 15 multiplied by 12.
So that would be what? 12 divided
That's
by 15
470 divided by 15.
times 470, right?
Yes. Multiplied by,
That would be
we have
376,000.
376.
Are we communicating, please? For the last one, which is 2015, please let's all pay attention. For the last one, which is 2015, we said the basis period is from 1st of July 2013 to 30th June 2014, right? So we have to be able to like figure out that particular year from what we have here too. Okay. So that period, 1st of July 2013, would have started immediately after this one ended. It would have started within this year. You know, this year end is 12, if it's 15 months period. It would have started within this year and it will end within this year, because this is September. July is before September, so it would have started before this September, and it will have ended before this September. Am I communicating, please? So we must be able to prorate this and add together. So for the previous year already took 12 months out of this year end, right?
Yes, so we have balance there.
So wait, sorry. So from this, so the previous year ended 30/6/2013, right? So from 30/6/2013 to 30/9/2013, how many months is that? 3 months,
3 months.
right? That is from the end of this basis period, and the year end that we have here is 3 months. So, and it is a 12 month period, right? So it means we'll figure out the 3 months from here, then now pick the remaining 9 months from the following one, from the next one. Let me do it. Let me demonstrate it for us. For the first, from 30 September 2013, which is a 15-month period, we have 3 months remaining. So we have 3 divided by 15 times 470, right? How many months is remaining? 9 months, right?
Months.
So we now have plus, open brackets, 9 between these 39/2013 and 39/2014. How many months is it?
Is a year.
Months.
That's 12 months, right?
Yes, 12.
12 months. So it means that it will now be 9 divided by what? 12
Yeah.
times what?
820.
Times 820. Bracket.
820.
I'll take it again. I'll take it again from the beginning. For the first accounting period, because that one was the old accounting date, we do not have any problem with it. We have the period fully here. We have the period fully here. Pardon me, please. 600,000. But for the following one, it fell into the year where there was a change. And the year when there was a change, like we said, is one of the things that leads to abnormal basis. The year where there was a change was a 15-month period.
Mhm.
So we have to prorate for the old accounting date. We have to prorate to be able to get our 12-month period, which started the day after this and ended within this, to get our profits for that period. So since this is a 15-month period, what we have to do to get our own 12-month period is to say 12 divided by 15 times 470. Then we now say that still under the old accounting date, for us to be able to get for us to be able to get the assessable profit for this basis period, we have to look at it and see where does it lie. This is 1st of July 2013. It means that it would have started before this, because this is 30th of September 2013. It would have started before this and would have ended within this year. That is, would have ended before this. So we have to be able to prorate both of them, right, to be able to get our assessable profit. We now say that from this 1st of July 2013, how many months can we figure out there from here? So we said from 1st of July 2013 to 30th of September 2013. How many months is that? July, August, September. That's 3 months. So that will now be, since this is a 15-month period, that will now be 3 divided by 15 times 470. but that is only 3 months out of it. The remaining 9 months is within this. And because this year to this year, 2014 to 2015, under the new accounting date, is now a 12-month period. We will now do that 3 divided by 15 times 470 plus 9 divided by 12 times 820. And that is what we have done here. That is what we have done. Please, if you do not understand, let me know. If you don't understand, let me know. Hosanna, please, do you understand the solution? I cannot hear you again. Hosanna, please, do you understand the solution?
Make sure you delete it.
Hosanna, please, do you understand the solution? Hosanna, we cannot hear you. Hosanna, are you there?
I'm also trying to press my calculator to get it correct.
Please. Alamide, are we on the same
I'm
page?
using my calculator to get it.
Yes, I got you, Hosanna.
Yes, sir.
Alamide,
Yes, sir.
are we on the same page? Do you understand what we did?
It's network.
Hosanna, please mute yourself. Alamide, please, do you get what we did?
Yes, sir.
You are sure?
Yes, I'm trying to see, go through it again.
Okay, please. Muibat, do you get what we did?
Yes, sir.
Abiodun, do you get what we did?
Yes, sir.
Chidima, do you get what we did?
Yes, sir.
You are very sure?
Yes, sir.
We are all very smart students in this class. All right. Okay. So the next step is to. It is because I am explaining, that is why it's taking so much time like this, and that's the reason why I said whenever we can stop today, so far you get the information, I'll be satisfied.
Yes.
For the fourth step, the fourth step says that we should do the same thing, but we should now use what? We should use the new accounting date. What is the new accounting date? Abiodun, what is the new accounting date?
1st of October 2011 to 30th September 2012.
Okay, thank you. So the new accounting year end is 30 September, right?
Yes.
So we have the same thing. The tax year. It's my this malfunction. Okay. We have the same thing here. 3 columns as well. Tax year, basis period, and accessible profit. So we have already identified that our first year of change was 2013. Our second year of change was 2014. And our third year of change was 2015. So under the new accounting dates, our basis period will now be what? 1st of October 2011 to 30 September 2012. Uzana, please, do you get it now? You said you were pressing your calculator. Please, do you get it now? Uzana, please, do you get it now?
Network threw me out too. I'm just joining again.
Okay, please just pay attention to this next one we are doing. I believe you'll be able to get the proration explanation from here as well. So I'll just explain like I've not explained before still. All right. So for the next one, for the next business period, it will now be for 2014 to be 1st of October, that is a year after the last one ended, 2012, to 30 September 2013. The last one will be 1st of October 2013 rather. So 30 September 2013. Now we have to be able to figure out the profits. Under the old rule, in the first year, the profit was straightforward because the accounting date had not changed then. But here we are using the new accounting dates. So it also means that we must be able to figure out this from our table. So they said, so for this 2013, under our new accounting date, the business period started 1st of October 2011 rather, to 30th September 2012. Where do we have that here? October 2011. Where is that? October 2011 will be immediately after this. This is 30 June 2011, right? That would be, it means that the period would have started between this year and this year,
Mm,
right?
yes.
So started between this year and this year. So we have to be able to figure from 1st of October to this period. So for this first one now, from 1st of October, right,
Also,
2011 to
mm,
30th of June. How many months is that? We'll first do that. How many months is that? Let's count from 1st of October. No, sorry.
no,
This one should be 2012. How many months is this?
September 22. That's 9 months, right?
Please, someone should calculate it. It's
It's
not,
9
it's
months.
not
It's 9 months.
9 months.
Sir.
Yeah.
Okay, 9 months. So what do we do? We'll say 9 months. 9 divided by 12. Right? Is it a 12-month period? Is a 12-month period. I be before between the period is a 12-month period. Year end
Yes,
is
yes,
12 months.
yeah,
Anywhere
yes.
you see here, just know that it's a 12 months. It's when you have periods that it's not 12 months. 12 year ended 12 months. That is, so for that first this thing, we have 9 over 12 times what? Times what, guys?
20.
Eh?
600.
600.
Is it
100.
520 or 600?
Yeah. Because this
Times
is
600.
July. It's 600.
So this is the year end that we are looking at, though. And this
Uh,
is the adjusted profit for it.
yes, because we have July here.
600, right? 600. So that's 450. So we know
Yes,
that we already we're able to already figure out 9 months out of this.
600.
So it remains 3 months, right?
Yes.
So the remaining
Okay.
3 months is the remaining 3 months will be between this year and this year. Am I communicating? Am I communicating, please? So that would be 1st of 2012 to 39. Am I communicating, please? So we have already figured out 9 months out of it. So it remains 3 months, right? I'm breaking it down like this because of Hosanna. It remains 3 months, right? Please let's unmute and let me know.
Yes.
Yes.
So for us to be able to figure out our 3 months, we said this period is how many months? Is a 15-month period, right?
15 months.
So it means that all we have to do is to prorate. We'll now say divided by is equal to rather 3 divided by what? 15 times what? 470. And that is how much?
You
Did I
wrote,
do
you wrote,
14? I did
you
14,
wrote
right?
something.
Yeah, sorry. Thank you so much for that. So that is what? 450, and that is what? 94,000. Communicating. So it means that the both will now be what? For both will now be the addition of the two. So that's 544,000. Am I making sense? Am I making sense, please? Am I making sense, please? Please unmute yourself and let me know if you're on the
Yes,
same
sir.
page.
Yes, sir.
Yes, 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 sir.
So I deliberately broke it down like this so that we can all get it. In the formula, this now just don't forget you in your you are not using Excel for your exam. Just to be able to like demonstrate how we arrive at this. That's why I'm using an Excel workbook. Okay. And that is because that's what works best for me. So follow the formula that I'm typing so that because you are going to be writing it down. So and you're going to be using your calculator as well, rather. So we said for this first year it will be we are going to prorate 9 months from the first one. 9 divided by 12 times 600, right? 1, 2, 3. Plus brackets so that it does not get mixed up. Say the second year where we can find our basis period is a 15-month period. So prorate 3 divided by 15 times 70. So that's 554,000. So is it clear? Is it clear, please? Hosanna, please, are you following us now?
Yes, sir. I just joined you, sir.
But do you understand what we are doing?
Don't bother, sir. Just drop the video after the
No.
class.
How would I not bother? I must bother. I must to bother.
Just drop the video. I don't want to take you backward again, but right now I'm following you.
Do you understand the way we got this 554,000?
Yes, sir.
You understand it, right?
Yes, sir.
Okay, so let's pick it from there. So the next one as well. The next one is a period from 1st of October 2012 to 30 September 2013. All right, and so where can we find that? Where can we find that? 1st of October 2012 will be after this period. It means it will be between this and this. And in fact, it ended. So it's in fact the year end already matched the year
Yes.
30 September 2013.
So the 12
So it
months,
means that the
15
remaining the
months
12 months that we are looking for is the remaining 12 months from this period to
from
this
the
period.
15.
This is a 15-month period. So what we have to do is since
Wow.
our business period is between these 15 months, all we have to do is just to prorate our 12 months out of this 15 months. So all we have to do is just to say is equals to 12 divided by 15, right?
Yes.
Times what now? Times what?
470.
Abiodun, are you following us? I heard your voice.
Yes, sir.
I'm sure you are getting it.
I'm getting it.
Okay. All right. Then
Okay, this is
for
2014.
for 2015 now, we can see that we are now in the new accounting period. So the basis that we are looking for will be directly in this place, will be directly here. So this is 1st of October 2013, which is a day after this. A day after this, so this there's a
So
mistake here.
30th, yes, 2014.
14. So it means that we can find this. This is just looking at this, like the 12-month period. There's no need for proration for that one. Am I communicating? So for this one,
Yes.
to what? 822.
820.
Now, step 5 now says that we should what? Sum up the accessible profit for each of the under each of the approaches. I'll sum this one. No, for your own exam, you have to use calculator. Am I communicating?
Yes, sir.
You know how to use your calculator to sum.
Yeah.
So 600,000 plus this, it will give us this. All right. For this, we have what? We have this 740. Am I communicating? And say that step 5 already what? Already done. Abi, we have done it now. It said we should sum the accessible profit under each of them. We have summed it, right? Right?
Yes, sir.
Step 6 now said. Step 6 now said we should compare and pick the higher. So between the old and the new accounting date, which one is the higher?
The new.
New. So the approach will be based on the new. Okay. And looking at what the question asks us to compute, the question asks us to compute the accessible profit for the 3 relevant years. So what will be the accessible profit for the 3 relevant years? It will be this, because this gave us the higher accessible profit combined. Do you understand? That once you tell the tax authority that you want to change your accounting date, what they will tell you is bring the details. Then they will do this. They will compute based on the old. They compute based on the new. And which one gives the government more money? The new. So they will tell you they're assessing you based on your new accounting dates. If, for instance, the old gave them more money, it's giving the government more money, they will not care that you have changed your accounting listing for that 3 months, for that 3 years. They will assess you based on what? They assess you based on your old accounting dates. Am I communicating?
Yes, sir.
Let's take a 2 minute break. Then we can, take the final question. Then I'll just introduce loss relief and we are done for today. I'll introduce loss relief, then we are done. I think we have one more question here. Okay. Okay, so we are correct. So the solution is also in the manual that I sent to you. The solution for this first one is in the manual that I sent to you. And the workings is also there. The workings are also there, rather. So then we'll solve this one together as well, and that will be all for today. Then I will introduce loss relief and we'll take it up from there for next week. Please use the 2 minutes to go through the workings, to go through the solution that we did. Please and please.
Okay, I'm joining the group now. Tax online. Yes.
Okay. I'll re-forward this thing for your sake. Okay. Next question says that Alamide, please can you read for us? Alamide, please can you read for us?
All right, so I'm not seeing your screen. Okay, I'm seeing it. It says illustration 5, right? Networks
Yes.
Limited has been in business for several years. The adjusted profit of the company for the following years are as follows. Year ended 31st March 2004. Adjusted profit is 500,000. The following year, 31st March 2005, the adjusted profit is 400,000, while the following year, 31st March 2006, the adjusted profit is 300,000. Period to 31st December 2006, the adjusted profit is 200,000. The year ended 31st 12 2007, the adjusted profit is 150,000. The following year, 31st 12 2008, the adjusted profit is 320,000. The following year, 31st December 2009, the adjusted profit is 150,000. Using a tax rate of 30%, computes the company's income tax liability of Network Limited for all the relevant years of assessment.
Okay. So basically, let's clean all of this. Thank you so much, Amiri, for that. Let's clean all of this and start them there and there. So, Alamide, your work is not over. What is the year of change here?
Okay, I'm coming. The year of change will be 2007.
Thank you. 2007. Do we all agree with him?
Yes, sir.
Okay, so it means our year of change is what? 2007. But for step two, they said we should select the two as 2008 and what? 2009. All right. 2008 and 2009. Okay. Then for step three says that we should compute using the old accounting date. What is the old accounting date now? 31st of March, right? Am I correct? 31st of March. Am I communicating, please? So we have
Correct,
2007,
sir.
008, 2009. Let's also figure out, let's delete all of this and figure out our, let me also delete this so that's, so for our first, for 2007, what will be the what will be the basis period rather? The basis period will be a day after, that is 1st of April, right?
Yes,
2005.
2005.
So let me just use 05. So 31st March 2006. I hope you all understand. 1st of April 05 to 06 rather. 1st of April 06 to 1 March 07. 1st of April 07 to 31 March 07. 08. How am I doing that?
08.
Sorry. 08. So for 2007, which is 1st of 1405 to 31/3, that one is straightforward. We can see it's
300,000.
the 300,000. Thank you. 300,000. For the next one, 1406, that will be immediately after this to this. So this period is how many months? This March 2006 to December 2006, please let's respond on time. Is how many months?
9 months. 9
Nine.
months.
So
Nine.
for that 9 months is 200,000, right? So we have to look for the
Yes.
remaining 3 months from the next one.
Mm.
Am I communicating? So that would be 200,000 plus 3 divided by the remaining 3 months. To make it a 12 months will now be in the next one. Will be in this particular place, right? So from year to year is how many months? This is how many months period?
It's one
12,
year.
1 year, 12 months.
12
12
months. So that
months.
will be 3 over 12
Well,
times
150.
what?
By 150.
Let's put this one in bracket so that we don't times 150. That was 237,500, right? For the third one, 1407 will be before this, right? No. Am I correct? It will be before this and it will end here, right? Am I communicating, please? So from 1407 to 31/12/07 is how many months? Is 9 months. Is 9 months. Am I communicating, please?
Yes, 9 months
We can take a click from here.
from April. Yeah.
From here, we already took 3 months out of it.
3 months out. Yeah. 9
So
months is
this
9
year
months.
we'll take the remaining. We'll take it remains 9 months from that period. So we'll first take that 9 months from that period. 9 divided by 12 times what?
Times 150. Mhm.
Is it? Am I communicating, please? 1,000 plus. We'll now add. We'll take the remaining 3 months from the next period. The next period is also a 12-month period. Is that correct?
Yes,
Yes, yes.
That will now be
that's
plus 3 divided by 12 times what?
Times
320.
320.
20. That gives us this. Step 4 now says that the step 4 says that we should use the new account. What is the new accounting date?
New accounting
31
27. 27.
31, 12.
Let's fill up this and paste it. So,
28, 29, 29.
so this one will now be from 4th of January. January when? 2006, Abby,
Yes.
to 31/12/2006. This one be 4th of January 07 towards what am I writing? 07 to 31/12/07. This one be 1108 to 31.
12.
Is it correct, please?
Yes, sir.
So for the first one, we have to figure out how to get it because it's a new accounting distance, so it will not be there directly. So from 1106 is from where? 1106 is before this, right? Am I correct? This is
Yes, yes,
31st of
yes.
March 06.
Yeah.
So it is a 3 months before, it's a 3 months period before this. So you have to take 3 months out of this, then take the remaining 9 months out of this. But don't forget, this period is already 9 months from here. It's not up to from this March to this one is how many months?
9 months.
9 months. Is 9 months, right? Is 9 months, right?
Yes, 9 months. Yes.
So
March to April.
once we prorate this one as 3 months, the next thing we have to do is to just add it to this. We don't have to prorate this one since it's already 9 months. What I said, is it clear? Is it clear, please? So, is it clear, please? Nobody's responded.
It's clear.
Okay, so that's the, I just want to be sure. 3 divided by 12 times what now?
300.
300.
300.
Plus 200.
Plus what?
200.
Now, from here, 2018, 1st of January 2017 to 31st of 2007 rather, we can see it as a full period here, right? This is
Yes.
12 months from here,
Yes.
right?
Yes.
So that
150.
one does not need proration. That's what
Direct
150.
150.
150.
Next one is also what direct, right?
320.
Yes.
320.
Because as at this time, the date has changed, so there's no whatever again. So now, fifth step now says that we should add the accessible profit together. So what do? We add this one. We add. Please let me confirm the addition. No. So add this one. So we have done that. We can see that, right? So in this case, we have already done step 5. In this case, which one is higher?
Old account, old dates.
This is higher, right? So it is 855,000, right? So we'll now say that the approach will be based on the what old accounting date. Right? It's something that we have to do. What did the question say? The question said using a tax rate of 30%. So if you do this, you might not get your full mark because you have not completed the question. You needed this to answer the question, but that's not the question. They said using a tax rate of 30%, compute the company's income tax liability. So what you're computing is the company's income tax liability for all the relevant years. So what do? Since we have decided that this is going to be our approach now, right? So now we have to now compute our tax liability for this. So what do? Just create an extra column, or you bring this down here and say computation of what net worth tax liability for the relevant years of assessment. Okay. So all you now have to do is copy the tax here. In this case, you might not need the basis period anymore. Let's copy the tax here down. In your case, you'll be writing. I like to remind you that in your case, you'll be writing what you're doing is here. And you copy you don't need this total anymore. Then now you now have your tax liability. What will that be your tax liability? You already told you the rate. So let's say at what? At 30%. Is it not 30%? They told you 30% now in the question.
Yes.
30.
So all you have to do now is very simple. Just to say 30 or 0.3. 30% 0.3, right?
Yes.
Times accessible profits. It gives you your
30,000.
tax. Are we communicating? So that is all that is required of you. Is there any question, please? Do we have any question, please?
Yes, sir.
Okay, please go ahead.
Okay, please, in computing this accessible profit using that existing accounting date,
Okay.
in 2019, I'm getting a different calculation.
You mean 2009, right?
Sorry, 2009.
For
No,
the old,
using
the okay,
old one,
the
the
existing.
existing one, yes.
Okay.
So
Let us look at
2000,
what we did together. So what we did was first of first of April 2007, we would have started from here. First of April 2007, we'll start immediately after this period, right?
yes.
To this period, 1st of April to 31st of March 2000. So it means from this period, we will take how many months?
From that period, we will take 9 months.
9 months.
Yes.
Okay, I think I get what you are saying. Okay, it
You
should be
use
from this.
820.
Sorry, it should be from this period then. Yeah, we are. Yeah, it's still
No,
okay.
I think your computation you used 820 instead of 320 that is given in the question.
Oh, so that is what is causing the difference, right?
Yes.
Thank you so much. It shows that you are following. Thank you. That was the oversight. Okay. It's the same what you have now. Is it the same what you have now?
I'm getting a total of for that 2009 I got 192,500.
Yeah, that's what we
Yes.
have. So
Okay.
730,000 is everything now. So based
Yes.
on this, can you see based on this, it shows that we have made a mistake. So it will still be on the new, all right? Because the new is higher. Am I communicating?
Yes, sir.
Yeah, counting date. So that was. Thank you so much. That was a mistake. I mistakenly pressed 820 instead of 320. So it means the tax liability we are going to compute to be based on the new, right? So what we have to do is just release this and replace it with this. Okay. So this is correct now. So our tax liability will now be computed based on the new accounting date because it is
Yeah.
higher. Yeah. Okay. So this is what we're gonna do. We're gonna stop the class here, right? Then I will start and finish loss relief. Pardon me for that. I will start and finish loss relief in the next class, and if time permits, I will introduce capital allowance as well. Okay. That's what we're going to do. Because the reason why I'm doing this is because I must wrap up with my part of the course by February, latest by 1st of March, according to the instruction given to me. And I also want to make sure as much as possible I am not rushing or bombarding you with information. Okay, so let us go back, internalize everything that we have done today. You can see that there are some part of it that is not straightforward, especially the proration part. Please go back. I'm begging you. Please let me stop sharing my screen and share my video. Please go back. Can you all see my video now? Can't see myself safe. Okay, I can see myself now. Please go back and you know internalize everything that we have done today. Okay, and try to get everything the way we operate, the way we have done everything. Please and please try to get it. Am I communicating, please? Is it clear? Is it clear, please? Please let's
Yes, sir.
unmute
Yes,
and
sir.
let me know. So I'm going to send, please, tentatively, I want us to have a class governor. I want us to have a class governor tentatively. Muibat, tentatively you'll be the class governor. Okay. Okay. Is that fine? For tax, you'll be the class governor. Is that fine?
Okay, fine. Yeah,
Okay.
fine. Thank you.
So please, you will have to reach out. Wait, did you do your last assignment?
I just joined the, you have to give, let me
Okay.
I just joined the group right now. I
Okay.
didn't get it.
So I will send, please reach out to me. I will
Okay.
send the new assignments. Remind me if I do not send it by Monday, please remind me. I will send the new assignments on this change in accounting dates. I'll send it to the group page for you all to attempt and send back to me latest by Thursday evening. I'll be expecting response from everybody. All right. Let me see.
Okay. Yes, sir.
Let me see who has not introduced. Ozana has introduced himself. Loveth, I think you introduced yourself the last time. Why you were late to the class? Is there an issue? Are you fine? Are you fine?
Good evening, I'm fine. Sorry, I closed late.
You closed late. Do you work in Lagos?
Yes, I do.
Oh, that's understandable. All right. But please, if it is avoidable, always try to avoid it. Okay. I believe the recording will be sent to everyone. So please go through the recording again for areas that are not clear. And I'm also
Thank
on the
you.
group page. I'm also on the group page. So if you have any question, you can always reach out to me.
I will.
Okay.
Thank you so much.
Okay. From today's class, is there any question that I can address now? None. None, right? Okay. Thank you so much and have a great night, everyone.
Thank you, sir.
Thank you. Thank you.
Thank you, sir. Thanks.
Thank you. Good night. Ozana said, Ozana, are you on the group page? She has ended, she has gone out of the call.